Hello, I'm Tony Kaye. Welcome to the Economic View. I'm joined by Evan Lucas, our market strategist.
Hello, Tony. How are you?
Yeah, good, Evan. Evan, there's not a lot going on in terms of economic news, but there is quite a bit going on behind the scenes in terms of monetary policy, fiscal policy on a global level.
Yep.
So I thought maybe we could talk about that and what it means for investors.
Yeah, you're right. So, other thing about the end of August is that it's the summer months in the Northern Hemisphere. So you get double fold in the fact that it's very low volume trading in the US as well, and particularly Europe, coupled with, as you said, a very low period of economic data. So that monthly cycle is always fairly weak at the back end. So I agree. It's an interesting period to be looking at macro thematics, because I think that needs to be probably the next build is that once you do get the Northern Hemisphere back firing on all cylinders in September, what that actually probably looks like. So looking at China and what's going on in China, looking at Europe and look what's going on in America. The reason for it is that those three economies really do drive everything else, and we sort of unfortunately follow suit. So China's been really positive for us, and I think that's the thematic is going to hold true. Everything we saw over August month and also July month suggests that leading into the People's Congress, which is supposed to be end of October, start of November, is all very much driven towards manufacturing, driven towards infrastructure spending, and you can see that in the things like copper price. You can see that in the iron ore price. Something that I always talk to our listeners about is that idea, is that is going to be the case, and you can still see all of the indicators are leading that way. Yeah. That's a real positive, and that's why you've also seen that everybody's expecting a downturn in those bulk commodities, and they haven't materialised, and I actually don't think they'll materialise until November, December, when you get the normal cyclicality leading into Chinese Lunar New Year. So that's China. So it's a positive from an Australian-centric point of view, and that's probably our biggest driver at the moment. What is interesting, we've got Jackson Hole, which is that symposium where basically you get the Kansas City Fed inviting all of the major central bankers in the world, and that gets back to your monetary policy question, to an event that happens every year to discuss this year the dynamic global economy. And that's a real interesting topic, because basically what they're saying, we need to talk about globalisation and why globalisation has actually been an incredible positive for the world and for the individual nations that participate in it, versus the other side, which is the rise at the moment of very nationalistic policies on the fiscal side. So we've seen Brexit, we've seen the election of Trump, we've seen even Marine Le Pen in France get very close, and she's a very nationalistic number. You've seen Pepe Grillo in Italy, and that's the next one to watch there at the end of the year. You've seen Geert Wilders in the Netherlands, and even here we've got One Nation as well, and to some extent. Now the reason it's hard to sort of link those two together, but the reason you do is that it's a very populist idea to protect your manufacturing, to protect your services on an individual nation number. And it makes complete sense. I mean, we've been talking about wage growth, about the employment numbers, and those typical, very traditional jobs and where they've gone, and what happens when you do have a downturn. What monetary policy has shown is that the movement towards higher manufacturing, look at Germany, look at France, and those that are doing quite well. So you've had the ECB with low monetary policy principles. It's put the euro to a more competitive level. And you have a look at what's been happening with particularly German manufacturing. It's been incredibly strong. It's the reason the DAX is one of the best performing indices over the last 5 years. And it shows in their PMI numbers, it shows in their GDP, and France is the same, despite the fact that Le Pen got very close. France has actually been doing quite well. They have some of the largest manufacturing and high manufacturing producers on the planet in terms of things like EDS, etc., which is aeronautical stuff. A lot of things like Airbus, all that material has done incredibly well, and that gets back again to that China story. If you have a look at the Chinese numbers for exports to Europe, they've been really ramping up, particularly things like steel, which gets back to an Australian-centric point of view. The iron ore demand is there. It's not just for Chinese infrastructure, it is for global exports. So that's there, but a change in monetary policy to slightly tightening is certainly going to come in Europe. And again, that push between what fiscal policy wants to do, which is basically nationalise, protect their own industry, protect their own sort of small market, versus the globalisation idea, is a real tough one that we need to watch. So Trump is a case in point, and you can see that what the Fed's trying to do and what Trump is trying to do are slightly at loggerheads. And that's why at the moment it's a thematic you have to be aware of, that unfortunately fiscal policy is more likely to be a bit of a headwind then a positive. Despite Trump's economic plan being a positive for US and the US being a leader, it is a US story. And you've got to remember that it benefits the US, doesn't necessarily benefit the rest of the world.
Yeah. So from an investor's point of view here, what are some of the practical things that, you know, one can look at in terms of this whole macro dimension, macro thematic dimension?
So that gives you exactly that. So the strategy side of it is that, okay, so my thematic is this, is that I see that monetary policy is going to try and work fairly universally. So we know that that's the case. The fiscal side, we know from what we just discussed, isn't. So how do I position for that? The US is an interesting one. So you look at it from the point of view that I, as an investor here in Australia, do see that the nationalistic policy of Trump has been a major driver for their market. That therefore means that, yes, you can look at ETFs and you can get exposure to it. The question therefore comes, and we've seen this, despite what's happened in the last sort of 48 hours, that there's now questions around whether or not that fiscal policy is going to continue to work. So if he can't get his economic policies up and he continues to fight his own party, Congress, the Senate, then that premium is going to come out. So where does it go? Where do those fund flows go? And again, I get back to the macro idea, is that actually manufacturing in the world is doing quite well. So you may actually see the flow from the US to Europe off the back of Germany still being quite a powerhouse, and that's where most of the flow has gone. You can also therefore look at it, okay, the risk policy is that it's still showing that cyclical growth is there. We've got a low inflation environment globally. That's a really good thing for growth. So maybe the China story is where you continue to see the funds flow, and emerging markets. Have a look at emerging market ETFs, and they've done incredibly well as well. So that's where the thematic sits on the top side. Looking again even further back down to here and looking at the Australian side, look at what has happened in the cyclical side of our market. Look at your BHPs, your Rio Tintos of this world. They're your key indicators to show you that there's actually been a reasonable swing to the upside in those producers because the macro thematic in China is very positive. It's also come through in our GDP, and that therefore means that you could go and look at it from, I want exposure to an indicator that is China, which is copper. So you can therefore even drill even further. Again, you can either look at an equity, or you can actually look at, again, a commodities ETF of getting that exposure to the China story. And that's again, so you start from the top up here, filter down to the idea that you therefore get out of the thematic, what that might be, the product, the commodity, the equity, and go into that. And that's how I base my strategies. That's how I use it, because what we've learned over the last 3 years and what we've just been discussing is that thematics have unfortunately become much more influential than bottom-up views. That will always be bottom-up, and we're going through earnings seasons. It's always very positive during those periods of time in terms of influence, up or down. But at the moment, you've got to have a very good funnel understanding what's going up here and how that's affecting down here.
Absolutely, yeah. It is very much a case of looking at the big picture.
Yeah.
What's going on? What are the key drivers for the Australian economy, for the Australian businesses?
And those that actually understand that a BHP is a microcosm of a global idea. It's got exposures to Brazil. It's got exposures to here in Australia. It's got exposures on a financial side to Europe and the US with the listings that they have. It's a microcosm of what we've just discussed. So if you're investing in BHP, for example, you're investing in the idea that the China boom story is part of it, that you're investing in the idea that demand for infrastructure, demand for those kind of products, copper, coal, iron ore, petroleum, are going to continue to move in a certain direction. And that's why BHP is such a fascinating product and why people always concentrate on it, because it is such a reach in terms of where its exposure is. You know, Gulf of Mexico, as I said, Escondida down in Chile, here in Australia, all of that gets back to the same. It's another principle of the macro idea. If you believe that China is going to continue to grow, then a BHP is clearly very much the way to look at it in another aspect.
Absolutely. Well, thanks very much, Evan.
Thank you very much, Tony.
Join us again next time on The Economic View.
Intelligent Investor Equity Income. Actively managed by the Intelligent Investor Analyst team, the Intelligent Investor Equity Income portfolio focuses on undervalued businesses that have the ability to pay a steady stream of growing dividends. Through investing in a concentrated portfolio of undervalued businesses, it is the income portfolio that doesn't leave growth behind.